Hey guys, this is MommyBelluga Investing.
Hi there, back again with me Ratih in MommyBelluga Investing. In this video, I will discuss the company traded in NASDAQ, Applied Materials with stock symbol AMAT or AMAT. After going through the numbers, my quick take for this company is, the first one is that the price is getting interesting. However, dividend-wise, it is less attractive as compared to other companies in the similar field such as TSMC. Taking the EPS growth into consideration, this company seems to be a growing company for at least the last 10 years. If I ever put a position in this company, would be because I'm hopeful for capital gain as the company hopefully continues to grow. How did I come up to the above conclusion? Follow my analysis till the end. Special disclaimer, I know that some of my husband's friends work in this company, so the current review is as objective as I'm capable of at the moment. I hope none of what I discuss here affect or offend anyone of you out there. Please consider to subscribe because it means a lot for a beginning YouTuber like me. If you have any comments or input, do not hesitate to put in comment section. It'll probably help me to get more perspectives and learn more. Then you can also access this channel in podcast versions through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. Alright, before getting into the data as usual, I read the disclaimer first. Disclaimer, this is an amateur video. My main intention is to record my own journey learning and practicing investing from scratch. Over time, you may find that some inconsistencies in my analysis and conclusions. Please bear with me. My analysis is limited to the public data that I can access and the scope of my knowledge. Both of those change over time. This video shouldn't replace any financial advice and it is a suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision. But if you do your own research, I hope this video could be useful somehow. Alright, now let's start from a brief company's profile. Applied Materials was founded in 1967 by Michael A. Neely and others. The company then went public in 1972. On the screen, we have Applied Materials at a glance, taken from their second quarter of 2022 earnings presentation. One thing that I want to highlight from the information on the screen is that the company has more than 30,000 employees in 19 different countries. So this company is a big company with multinational branches. Applied Materials, or Applied to be short, operates in 3 reportable segments. According to the company's report, those segments are, the first one is semiconductor systems, which develops, manufactures, and sells a wide range of manufacturing equipment used to fabricate semiconductor chips, also referred to as the integrated circuits or ICs. The second one is Applied Global Services. Business on this segment provide integrated solutions to optimize equipment and fab performance and productivity, including spares, upgrades, services, remanufactured earlier generation equipment, and factory automation software for semiconductor display and other products. The third reporting segment is display and adjacent markets. This segment comprised of products for manufacturing liquid crystal displays or LCDs, organic light emitting diodes or OLEDs, and other display technologies for TVs, monitors, laptops, PCs or personal computers, electronic tablets, smartphones, and other consumer-oriented devices. The way I understand Applied business is that this is a company that makes equipment used for other companies to produce electronic spare parts. For example, I buy my phone from Apple, and then the chip or its integrated circuits or ICs on the phone is made by TSMC or Samsung. The equipment that are used to make those chips by TSMC and Samsung are made by Applied Materials. From NASDAQ free available information, majority of AMAT's shares or applied shares are held by institution. That is about 78%. The top two shareholders are very familiar names. They are Vanguard Group and BlackRock. Each of them hold about 10% each as of the 31st of March 2022. Alright, that was a brief look at the companies. Now let's look at its performance. To evaluate applied materials, here as usual I plot 3 layers of information. Those informations are: the first one is their earnings per share. Here I plotted as red round markers connected by a red line. I also added green dash line to indicate the zero earnings, where earnings below this line indicate that the company's recorded a loss in that period. From the EPS earning that I have since 2008, we can see that in general, applied, the company is growing in its profitability. However, there were several downturns which are worthy to look into. Now let's discuss them. There are this is the green dash line. There are 2009, 2012, 2018, and 2019. Let's take a look at them one by one. In 2009, the company recorded a loss for quarter 2 and 3. The company's CEO, Mark Splinter, attributed the loss as a result of difficult environment. The company revenue were dropped significantly with the economic downturn. I recall this loss also coincided with the US subprime mortgage collapse. The company reported that they went through massive restructuring in its effort to return to profitability. Those efforts are, the first one is that cost cutting, resulting in lessening of 10 to 12 of its workforce. That translated to 1,300 to 1,500 position reduction over 18 months. Consolidating their manufacturing supply chain and customer. That is making them closer to each other. That was the second effort of cost cutting. The 2009 restructuring seemed to work well, as the company recorded profit in the next year, 2010 to 2011. Then Applied recorded a large earning drop again in 2012. It reported about $545 million of goodwill and restructuring charges in its fourth quarter of 2012. And that was also coupled with $499 million of operating loss. It seemed that the restructuring shock lingered for 2 years since it was started in 2009. Since 2012, Applied's profitability steadily recovered and it reached the 2010 level by 2016. Probably wasn't that bad, but it was most likely harsh for the company. It had a massive earning increase in 2017 before dropping down again for 2 consecutive years in 2018 and 2019. Both declines were attributed to lower sales. I couldn't find anything special in 2018 and 2019 which co-contributed to the decline in profitability for those years. Since then, in 2020 to 2022, there seems to be massive growth period for the company. Alright, so that was about the company's earning growth. Now let's look at the company's other financial positions. That is the cash position as the second layer of information. On the screen, we have the company's cash position since 2008. I found this information to be critical since Applied has to finance their restructuring effort in 2009 through 2012. Interestingly enough, Applied's cash position jumped to about $6 billion in 2012. Digging further to their quarterly statement, apart from improved cash from operating, about $2 billion of that cash came from the raised debt and about 1 billion came from other financing activity. So even though they had the cash information useful to peek into the company's health, it is only half of the information, I think. To get the other half, I'll compare with their short-term liability, which is the third layer of information in our graph. Yes, here, finally, the third layer of information, which is the current liabilities. So the current liabilities is the debt that Applied needs to settle less than a year. It is useful to have cash at hand to settle that. The picture I normally look for is the cash position that are higher than the current liabilities. It means that the company has enough cash to pay its current liability, obviously by using cash. Okay, here I'm seeing a mix of those with some year higher and some year lower. The cash positions are much higher than their current liabilities in 2012, 2014, 2015, 2017, and 2020, while the rest, their cash positions are lower than their current liabilities. So far, the profitability of AMAT doesn't seem to be worth of my worry. Now let's look at the perks of the company's shareholder, the dividend. To see the dividend payout and its sensibility, so here I plotted 3 layers of information. The first one is the dividend payout over the last 13 years, which I plotted as red round markers connected by a thick red line, as we can see on the screen. On each of the points, I have annotated with 2 numbers. The numbers above the markers are the dividend payout in US dollars, and the ones below are the payout ratios to the respective year's earning per share. As a comparison to the earnings, here I plotted back its EPS or earning per share as a thinner line with the same color, red. Right, let's look at our graph that we have on our screen here. Applied Materials had a rather hectic dividend payout prior to 2014. Prior to 2014, Applied had a few occasions where it paid dividend more than its earnings. They were in 2009, 2012, and 2013. The dividend payout became more reasonable post 2014, as I mentioned earlier. The payout ratio have been steadily declining from around 46% in 2014 to about 7.8% in 2021. Though in terms of the actual number in dollars, they're not that different. Looking at the absolute numbers, dividend dollars amount increased lower compared to their earnings, which to me is a rather good thing. Right now, let's take a look at the dividend from a slightly different perspective. Whether the dividend payout beat the bank deposit or even CPF interest. Alright, so here I plotted the average dividend yield per year as the round markers. At each of the markers, I place an error bars, which represents the range of yields over that year. The variation in a year is caused by the volatility level of the share price. The yield increases if the share price decreases and vice versa. At a glance, let's look at the graph that we have on the screen. At the glance, dividend yields hovered between 0.4 to 3.6-ish%. The low yield could be understandably driven by the bull market in 2021, which pushed the company's share price upward. Currently, the company's dividend yield is around 0.4%, which is, for me, not so attractive as compared to bank deposits or bank deposits or SSB, my favorite. Okay, the next item on my list is the company's market valuation. Let's discuss the market valuation. To see Applied's market valuation or reasonable price for me, here I plotted 4 layers of information. They are: the first one is the price, which represents the market valuation of the company. It is also the easiest information that I can obtain. I can use the search term Applied Materials share price, and it will pop me with this graph. But price alone is sometimes misleading for the company's value and its prospect. So I'll include some other fundamentals indicators to help me to decide. The second layer of information is the 10 times earning multiplier, which here I plotted as a dashed green line. 10 times earning multiplier can be considered as the price where price to earning ratio, that is the PE ratio, is 10. For me, I consider 10 times earning multiplier has two purposes. First, it indicates the price where I have higher chance to break even within 10 years. You could also plot 5 times earning multiplier if your investment horizon is 5 years. Second, as a consequence for the first reason, I consider share price above 10 times earning multiplier to be expensive. The third layer of information is 15 times earning multiplier. With the same principles as the 10 times earning multiplier, price above this indicator generally will be deemed as expensive. Here I plotted the 15 times earning multiplier as dashed yellowy line, just like the traffic light. The fourth layer of information is the 20 times earning multiplier. Here I plotted as a dash red line. I consider the share price to be super expensive if it ever crossed this line. For a growth company, I consider to cut down my position if this ever happened. So now let's see what's going on with the applied share price. Alright, let's look at the graph that we have on the screen. At a glance, the market doesn't seem to be bullish for applied at least until 2021. Prior to 2021, applied share price practically followed the 15 times earning multiplier with the support level at 10 earning multiplier and the resistance at 20 earnings multiplier. There were a few occasions where the support were touched. They were in mid-2015 and early 2019. Right. Since 2021 till early 2022, the market were very bullish for the company, where the valuation tracked the 20 earnings multiplier. Now in mid-2022, the market seems to be recovering from its euphoria, with the price returning to 15 earnings multiplier and seems to be on its way to track its 10 earning multiplier. So given this historical data, what would be my reasonable price? As of 24th of June 2022, when this video was prepared, applied stock price was at $97.36 US, lower than its 15 earning multiplier at $104, at around $104. I think the current price is pretty fair for those that can stomach market volatility. However, for the better peace of mind, I would be interested in making position around $70 actually, which to me will have a better chance for bouncing back. Alright, now conclusion. For me, it's in short, I can say about this company after going through its numbers for the past 13 years, I think it's a growing company with rather fair market valuation for its current price. The first one that I want to say about this company is that the price is getting interesting, so I don't mind to put a limit order at $69 to $70 for now. For those who have watched my other videos on my family investing journey would know that my target for dividend yield is around 66% per annum. So with 0.4% dividend yield, applied materials is not attractive for me in terms of dividend yield. As a comparison, TSMC gives 2% per annum. However, dividend-wise, as I mentioned, dividend-wise, it's less attractive as compared to TSMC. However, taking the EPS growth into consideration, the company's Applied Materials seems to be a growing company for the last 10 years. So if I ever put a position in this company, it would be because I'm hopeful for capital gain as the company hopefully continues to grow. But I do have some reservations, mainly in terms of high amount of share buyback every quarter. I don't have any good or bad interpretation on that, but normally I do not like too much of a share buyback. Right, that's all that I can say for this company, at least for this point in time. If you find this content to be informative or interesting, please consider to support by clicking the subscribe and like button. Appreciate your input to improve this channel through the comment section. As I've shown on the screen, you can also access this channel in podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. Thanks for watching, and I'll see you again in my next video. Goodbye.